What's up, everybody? This is my first time using going live, using Restream. So I'm testing it out. I'm Jamal, the credit protector. And today I wanted to talk about a couple of terms that you're going to hear often in the financial literacy space, the funding space, the credit space. And I wanted to give y'all a little bit of info about what these things are and how you can use them. So the first thing you're going to see often is no doc loans, right? You're going to see no doc loans, no doc products, and essentially what a no doc product is, the official name is called a stated income application. So a stated income application is something like a credit card where all you have to do is have like a 680 and above, and you can apply for this credit product and you'll get approved. They're going to run your social, they're going to check your credit report, is going to show up as a hard inquiry on your credit report. But if you're at a 680 and above, you're going to get approved for this particular product, right? I would say definitely always aim to be at a 720 before you to maximize your chances of getting approved. Another thing to know about a stated income credit application, aka a no doc loan, is that yes, you will need good credit. This is not a situation where bad credit applies. If you got bad credit, no doc loan, stated income applications is not the way you want to move. But if you are in a good credit situation, you can definitely get that and run up the bag. You can get, zero interest credit cards. There are a ton of zero interest credit cards out there, right? There are even no doc loans out there where, as long as you have good income, and let's say you're at a credit union, um, you're able to get approved for that loan. Now, let's say you don't have good credit, right? Then on the flip side, so we have no doc loans. The flip side of a no doc loan are no credit check loans or no credit check lines of credit. And they have credit cards that do not run your credit. With these, instead of looking at your credit score, your credit report, these no credit check products are looking at your income and your cash flow. So a lot of times they're going to want to connect to your bank account. Some of these products include the X1 credit card, which is a personal credit card, the Tomo credit card, which is a personal card. These two cards can be acquired with no credit check, but they will want to connect to your bank account so that they can monitor and evaluate your cash flow. And what will happen, these no credit check products are going to base your approval on the cash flow. They're also going to base the approval amount on your cash flow and how much money is in your bank account. On the business side, you have things like Cap on Tap, Revenue, the Divvy card, um, and Blue Vine. These type of cards, they may do a soft pull, so it won't hurt your credit to the point where you won't see a drop in your credit score because they check your credit. But again, they will be looking at your cash flow and how much money is in your bank account. So with these type of cards, what you'll want to do is dump as much money in those accounts for like 2 to 3 months or something before you actually apply for a, what, for lack of a better term, bank statement product, right? On the mortgage side, it may not be called a no credit check. but it's a bank statement loan, where with a mortgage, you can qualify for a mortgage based on your bank statement, based on the cash flow. It's also nicknamed the entrepreneurial mortgage because most entrepreneurs don't have W-2s or 1099s. Our bookkeeping in the early years be wild as fuck, or cursed. Oh well, hopefully they don't ban me. Um, it'll be crazy, right? So they do have bank statement mortgages where if you got the cash flow through your business and your bank statements are looking good, you can get a mortgage, get a house with just these bank statements, right? Those are special. That's a specialized product, so you definitely want to shop around for those. Or going back to like Tomo, X1, Bluevine, with those, you'll want to make sure that you're able to pump as much money into those bank accounts as possible. So a lot of different ways to do that. You may want to do some manufactured spending in order to get cash flow going through that bank account, right? You can manufacture spend, liquidate a card, put the proceeds into the bank account, and then have the proceeds exit that, right? If you have, let's say you have two to $5,000 that you can leverage to cycle through that bank account, right? You can take $2,000, cycle it through ACH payments from one bank to another bank to another bank to another bank, but it's still going to be considered, looked at as revenue through that bank account, right? Some people get confused between revenue and profit when it comes to credit applications. Revenue is how much money is going through the account. It is That's what revenue is, just how much money is coming in, how much money is coming in. Profit minus expenses. So the nice thing about credit applications is that it's going to go based off of your revenue. They're not going based off of the profit, because a lot of people would not get approved for any type of business funding if it was solely based off of profit. And so with a lot of these no credit check type of products, Blue Vine, Tomo, things like that, where they do a soft pull. Blue Vine, they actually pull your credit. They're definitely going to pull your credit. Um, One of the other things with the cash flow is typically they'll loan you a percentage of your annual revenue. Okay, so let's say you are only showing $3,000 a month, right? That's 36,000 for a year as a business. So if you're approved, you probably will get a low limit because you're not showing very high revenue. You'll probably get a $3,000 to $5,000 limit. Now, if you have a strong credit score plus $3,000 in revenue, you may get a higher one. But if they're going strictly off of what's in your bank account, they're going to do about 10% of what your cash flow is. And so you can take that formula and scale it up with your dollar amounts. So if you're doing 10,000 a year, 50,000, I'm sorry, 10,000 a month, not 10,000 a year, 10,000 a month, 20, 30,000 a month, that institution will give you about 10% of that revenue. Now, where it gets spicy, and you hear people getting, half a million dollars, is that they are going to multiple banks, and multiple banks are lending them 10% of their revenue. So if I'm doing $20,000 a month, 240, that means 240 a year. That means I could go to one institution, get 24,000, then go to another institution, get 24,000. You see what I'm saying? So you hit 5 institutions, boom, upcoming event. I don't know what that. So you hit 5 institutions, right? You're at $100,000 in credit on top of the positive cash flow and the revenue that you have going through that bank. So that's what it is with when you are looking at different things, like you'll hear no doc products or a no credit check. If it's no doc, is that you already know, you hear no doc, that's credit score. You're going to need a decent credit score to get that no doc product. Stated income credit application. On the flip side, when you hear something like, oh, get approved for $50,000 with just a soft pull, in your mind, cash flow. They're looking at the cash flow to see if the amount of money going through your bank account can support a $50,000 credit approval. Right. So that's the back end. Another way that you can look at these things and think about these things when you hear it, because they're great buzzwords. They sound amazing for marketing, but you want to understand the back end. That way you're not wasting your time, you know, being like a rabbit chasing a carrot on a stick, right? You want to make sure you have the right strategy. And there's ways to do it where if it's based on revenue, you can manufacture revenue. You can do ACH transfers into that bank account. You can do manufactured spending. There's nothing wrong with that. If your friends and family are paying you to perform a service for them, whatever that service is, you can send them an invoice. They can pay the invoice goes into your bank account. That is 100% considered as revenue, right? This is a way that you can start building that revenue up. If some people may feel some kind of way about charging their family, so be it. But send out those invoices to family and friends, have them pay those invoices. Boom, that's cash flow. That's cash flow into a bank account that you can get a loan on. Okay. Unfortunately, Cash App is not in a position where Cash Apps don't qualify you for any kind of lending whatsoever. Something else you guys probably want to know: zero interest credit cards. Zero interest credit cards are also no doc products. As long as you have a good score, as long as they can verify your identity, you are good to go. Okay. Now, some credit card companies like American Express and Discover, what will happen is they will verify your verify your income after the fact. So if they see a drastic change in your spending habits, or yeah, if they see a drastic change in your spending habits, if they deem a recent purchase or purchases as risky, then they'll do what's called a financial review. So they already approved you for the credit cards, but your spending basically freaked them out. So they're like, hold on, let's let us see what the hell this is all about, and if this person can actually afford this spending, because we don't want them to like run it up on us and then file bankruptcy, and now we just kind of SOL, we can't get our money back. Because believe it or not, everybody is borrowing money from everybody. Okay, don't let nobody fool you. I understand that our money isn't backed by anything. We have fractional reserve, so they can lend out 10x the money that they get or that we deposit, right? We deposit in $1, they can lend out $10. But even the banks have shareholders, even the banks owe people, right? So they don't want to be in a position where they don't get their money back, because then they can't pay their money back, because everybody is paying everybody. All of this is based off of debt, right? You go to a car dealership, you get the car. Guess what? The interest that you're paying helps the car dealership pay back the loan that they got for the car that they sold you. So it's a continuous cycle of debt. Okay. So I know people, I get it. They're gonna say, money isn't real. Facts. It's not backed by anything. Facts. The United States is off the gold standard. Also facts. Money is just valuable because we said it's valuable. Also facts. They were paid when they ran your social. Kind of factual. a little bit. But at the end of the day, in order for them to even get the car to sell to you, they also had to have their credit run to get approved for the loan to get the car that they are then selling to you for a profit. And that's how everything works, right? If I have this hat, I got this hat for $12. My goal is to sell this hat for $20 because I had to spend money to buy the hat. And now I want to return on my money plus a little more so that I could potentially go buy more hats. That probably wasn't the best. Yeah, make a $5 profit on a hat. That's what I'm saying. So I want to be able to sell this hat for 17 if I bought it for 12, right? That way I can have $5 in my pocket and re-up and buy more hats. So that's how that works with the no docs and how it works with no credit check. So if it's no credit check, they're probably going to ask you for bank statements. They're going to have you connect your bank account directly to their system using Plaid or some other API integration like that. If it's no docs, you want to make sure that you're at least a 680 at the worst. I really would highly recommend you being at least a 700 with no charge offs. No charge offs, no bankruptcies within the past 2 years. Okay. If you're recovering, speaking of bankruptcy, if you're recovering from a bankruptcy, you can buy a house 2 years after your bankruptcy is discharged. That's just a FYI. But I just wanted to hop on, test out this restream situation, and I never went live on IG. So I'm going to see what this looks like on the other side once this uploads. Um, yeah, I'm Jamal, the credit protector. Tap in with me if you have any questions about your personal credit, business credit, structuring your business credit cards, no doc loans, um, no credit check, lines of credit. I gave y'all three. No credit check is going to be Blue Vine, Tomo, and X1. Okay, so appreciate everybody tapping in. Feel free to leave a comment wherever you're watching this, whether it's YouTube or Facebook. I'll make it fancier next time as I learn the platform and how it works. And that's everything, y'all. All right. Peace.